Hello and welcome to the 2022 November portfolio update for Dividend Hub. Let's jump right into it. So the dividend income of the month is 99 cents from Realty Income, $1.41 from AbbVie, $1.04 from Hormel Foods, $1.06 from Starbucks, $1.05 from Lowe's, 60 cents from A.O. Smith, and $1.24 from Texas Instruments, totaling in about $7.39. It's a pretty good dividend month. I'd say it's smack on average for us right now. Anyway, let's jump right into the new purchase of the month. So this month's purchase will be Target. This is a bit of a I've said it a lot recently, but this is one of my gambles, I think. Let's start with the small things that are good column. We have a really solid 11.6% 10-year dividend growth rate. In the short term, it's been even better, but I think that's unlikely to continue. In terms of the long term, okay. Anyway, they've been growing their dividend for 54 years, which is really good. It's one of the biggest reasons why I kind of want this in my portfolio. It's long, stable, good growth rate over the semi-long term, like 10-year, and the payout ratio is 51.7%, which is pretty good, actually. They had a pretty sizable drop this year, about 28% year to date as of right now. So I felt like this is at least decently priced now. Let's get into the not so great column. So there are a few big worries for me. First and foremost, their free cash flow has declined 35% since 2021, which is obviously a pretty big decrease. They're also like working on lowering expectations, and they've missed estimates a few times in a row, which makes me think that their dividend growth is likely to slow down quite significantly. But that's fine. Things go up sometimes, and then sometimes they go down. I still decided that I wanted Target in my portfolio. So I bought one share for $162.41. Their annual dividend is $4.32, which is about a 2.6% yield. So the short term, the last year they increased their dividend 20%, which is a massive, massive increase. The 3-year average is almost 18%. And then we get down to the 5 and 10-year average, which is around 11.7, 11.6%, which is still really good. Just from the kind of worries that go around right now, I would probably, I'm guessing right now that it would be lower than the 10-year average. I'd be kind of surprised if the next dividend increase is higher than the 11.6% average. I think it's very unlikely. But that's it. Looking at the dashboard, we're really closing in on that $100 annual dividend right now at $95.70, with a 10-year dividend growth rate of 12.06%, which is an average over the portfolio, which is obviously not true since the holdings are not exactly the same, but it's pointer in the right direction, right? Our current yield on cost is 3.16%. And we have one more dividend month of the year left, and then at that point I'm gonna review the goals of 2022, and I'll also be adding some new goals for 2023. So that's gonna be fun. The overview now looks like this. I have changed a few things around because I realized there's about 22 stocks in the portfolio as of right now. And it's starting to get a little bit annoying to handle, this view particularly. So I've added a filter which kind of messed with the formatting. So I've shortened some things. The dividend yield is now called div yield, and div yield on cost, and div. So I'm sure everyone understands, like, and dividend is annual dividend. And then we have annual dividend per share, and then 1 year dividend compound annual growth rate, and so on and so forth. This is so I can sort this thing later, and that's going to be very important coming up when we have, I don't know, more stocks in the portfolio. And I want to make sure that I balance it out properly, or evenly at least. And I can also like sort in different sectors and just look at the things that I need to look at or want to look at more easily. But so this view is looking a little bit different now. Anywho, I think that's it for the month of November. So that's it for me. Have a really nice day.